This is the Retirement Key Podcast with Abe Abich, founder of Abish Financial Services.
We see a lot of successful do-it-yourself investors, but there's a major difference between pedal to the metal, getting up that retirement mountain, and then descending down the mountain safely into retirement.
You've worked hard your whole life to earn and save. Now you need a plan to make that money work hard for you.
Hang in there, and the markets will come back, and we're in the same boat as you. Is not comforting for someone who is 58, 65, 72, and there have got to be better ways to do things, and there are.
Abe is here to help you unlock the keys to your retirement.
So we're into May, and it's that vacationing time of year, I feel like, for a lot of us. But you didn't spring break it. You got a little bit of a vacation head start, though.
Just a quick weekend down south, down in Miami, and got away for a nice few days under the sun in Palm Tree. Man, the sun is strong down there.
Yes, it is.
But, it was always good to get away and refresh your batteries, recharge your batteries. And while I was down there, saw a few celebrities. One of them, Kevin O'Leary. So I was, every morning I would go out for a walk or a run, and it was just a really nice paved beach path that goes all the way up and down the beach there. And one morning, Kevin O'Leary rode his bike right by me. He was cruising. It was just one of those relaxed bikes where he's just,
the beach cruisers.
The beach cruiser. Yeah. He had his headphones in and shades on and a tank top on. He definitely wasn't on the job.
Right.
But he was probably listening to some market commentary or something.
Some people just don't know how to turn it off. And I say that because of how I know, because I'm talking to you're a little bit that same.
It's hard, but I imagine he was turning it off there, he seemed pretty relaxed, and looked like he was thinner too. Looked like he had dropped a little bit of weight, but that was pretty funny to see him ride by the beach path there in Miami.
He's looking after his own health. You've actually been on your own little health journey over the past year as well. So I know you can relate to all of the above. It's
important. Your health is really your wealth.
That's right.
You can have all the money in the world, but if your health stinks and you die at 72, I mean, you didn't enjoy it, and you didn't enjoy life with your family and friends and all that stuff too. So taking care of your health is super, super important.
There's a lot we can learn from Mr. Wonderful himself. And
how about that?
Actually have a little bit of his insight in the way of how we can approach our investments today, Abe, because thinking about the uber wealthy and how they might partition themselves during these type of volatile market times like we have been living in over the past 18 months. Shark Tank, that's where if you're thinking to yourself, why don't I know the name Kevin O'Leary? He is Mr. Wonderful from Shark Tank. He's one of the sharks.
Yes.
I Googled him. The Google says his net worth is around $400 million. And he had this to say to Fox Business about the current market climate.
A balanced portfolio used to be 50% fixed income, 50% equities. Mine right now, and I'm not telling people what to do, but I'm 70% equities, 30% fixed income. And I have some cash, obviously, but we're in very unsettling times regarding interest rates. Half the world thinks they're going up. The other half thinks they're going down in interest rate cuts by the end of the year. You simply don't know, so you need diversification.
All right, nobody's going to argue that we need diversification, but most of us also are not day-to-day Wall Street sharks like Mr. O'Leary, Abe. So to further narrow our focus here, the people that you work with, these are folks that are very close to, if not already in retirement. They don't have this time horizon to withstand big market losses. So
exactly.
What do you say to these folks who are coming to you?
Diversification is key, especially for a middle American family, Heather, who's saved. Typically we meet with people in their 60s, maybe early 70s, maybe late 50s, that have usually saved $1 million to $3 million. Kevin O'Leary, $400 million, does not have all of his eggs in one basket. He's saying normally, people will be a 50-50, 60-40. He's currently a 70-30. And the reason why is there's been more growth on the equity side than the fixed income side. Yields are usually low on the fixed income side. And he's making more money and in a place in life with $400 million that he can accept that risk and be a 70-30. Well, we just met with a couple, Heather, that came into us from Herndon, Virginia, just 15 minutes away from our office. And they've done really well for themselves. Not $400 million, but they've saved $4.5 million, which is an outstanding job for just a middle American family, just plugging away every year, making a few $100,000 a year at work combined and just socking it away to the point where they have, actually over $5 million in net worth when you include their real estate. So this couple in Herndon came into us, called into the show, came into the office. They're in their 60s. They're retiring January of 2024.
Nice.
They're a 5 on our risk scale. That would be Kevin O'Leary's typical 50-50 mix, a mix that a lot of advisors would recommend for somebody in their 60s with less than 12 months away from full retirement. The problem was, as we ran our Morningstar and Riskalyze investment analyses on all of their holdings, we found out that they were an 87-13 split, or 87% in stocks and 13% in bonds.
Wow.
When they want to be a 5. Even Kevin O'Leary with $400 million is not invested as an 8.7 with 87% in stocks. That's too much stock exposure for the average middle American millionaire and baby boomer who's just about to retire or already retired. So I said, if you take nothing away from this meeting, guys, you have to lower this stock exposure unless you're truly an 8.7 to 9 on a scale of 1 to 10 and it can accept all this risk. Mm-hmm. But guys, with $4.5 million saved, you have clearly won the game. I hope you can see that after our meeting, which they could. They only spend about $100,000 a year, $4.5 million saved, 2 Social Security checks. They're in fantastic shape. So why take on any extra risk than necessary? This is the discussion we had. As we went through the investments, we also found out that because they had 87% in stocks, if they continue to invest the way they are without change, and we have another 2008, they would stand to lose 30 to 40% of their life savings in 1 year. That is absolutely unnecessary if you have that kind of money saved to incur that type of loss. And you would only incur that type of large loss if you are taking on too much risk. We also found out, Heather, that across their whole portfolio, because it's scattered around, they're paying an average of 56 basis points in fund cost, a little more than 0.5%. And that's not extraordinarily high, but it's also not extraordinarily low.
Okay.
It's costing them $22,000 a year just to own their portfolio. Jeez. Where we showed them that we could probably get that down to about 10 basis points or a savings of almost $15,000 to $18,000 a year. Heather,
that's huge.
That's a lot of money. If you're in your 60s and you're saving $15,000 a year in fund cost and you live another 30 years or 20 years, man, that's hundreds of thousands of dollars of potential savings just on the fund cost in your portfolio. You've got to look at these funds and these fees and the costs of these products. They could be like termites eating into the total return on your portfolio. It's very important to have a very low cost portfolio that performs well for you. Mm-hmm. So the solution for them, Heather, just like so many couples, was to bring that risk exposure down. This couple's won the game. They've clearly have enough money saved for retirement. Bring that equity and risk exposure down to maybe a 5 to a 6 so they can sleep better at night, right? So it can add peace of mind to their lives and they don't have to worry about CNBC and what the stock market's doing at the close of business every day. Reduce that stock exposure down. It's going to bring the standard deviation down. It's going to bring the turbulence down, which will allow them to live a great retirement. Avoid large loss. Diversify. This is key. This is one of the biggest things you can do to secure your retirement is to avoid large loss. You do that by great diversification.
Abe, while we are on the subject, you were saying recently you went to Miami, enjoyed yourself. Mr. O'Leary, he was there too. And you're not alone because a recent poll shows 70% of Americans, we plan to have more fun and spend more freely. And you can tell that I am here for it. Our plans to do this over the next decade instead of saving, which is kind of like, okay, well, let's be smart here, everybody. At the top of the list was traveling. This is how we want to spend our money. Nearly half of us plan to do this more, including a lot of retirees. So how do you work to accommodate things like travel dreams and the retirement plans that you build?
You know, Heather, having a lifestyle plan in retirement is just as important as having an actual retirement plan.
Absolutely. Yeah.
And unfortunately, most of our industry focuses on just growth, and rate of return. What are you making? What are you earning on your investments? While this is very important, few advisory firms, we believe, actually talk about distribution and income, getting money out of the portfolio, enjoying it without the fear of running out. I mean, after all, isn't this what you worked your entire career for, your entire life for, to get to the point where money isn't an issue and you can do whatever you want to do in retirement without worrying about the stock market and your next paycheck? This is what a sound retirement plan should do. This is what a phase 2 retirement plan should do for you. So we just had a lady call in and come into the office from Fairfax, Virginia. And she's in this category right here. She says, Abe, I want to be able to retire. I do not want to think about this. This is why I want to hire you and your company to generate income for me, put together a portfolio where I can do the things I want to do. And her first year of retirement, she's 69, turning 70 next year, retiring in the next 12 months. In the first year of her retirement, she wants to take a really, really nice cruise, like a $60,000 cruise.
Wow.
Which is, do
it.
Yes. And I'm like, you have enough saved.
Nice.
You have enough saved. And with the right plan, you can do this, and you should do this because now's the time. You know, you probably heard, Heather, you have your go-go years, then your slow-go years, then your no-go years. This is the go-go years for you. For most of our clients being in their 60s, this next 10 to 12 years, next 10 to 15 years, this is our go-go years. This is when we want to have as much cash and income and surplus coming in as possible to do these things so that when we're in our 80s, we've done the things that we want to do without regret. So the problem with her is, just like so many people, is she didn't have a plan to help her generate income. She had no phase 2 plan, no income plan, no idea how to generate income, how to get distributions out of the portfolio. There's just very little language out there and very little instruction out there on how to do this. Tons about investing, very little about income and distribution and retirement. So the solution for her was to create a comprehensive income plan that is updated every 90 days, that takes all these things into consideration for her and shows her how to generate reliable, dependable income that she can go out, live with confidence and with dignity, and do the things she wants to do, like these trips. If you're listening right now and you don't have a phase 2 income generated plan, a plan that will put everything together for you and create a roadmap for yourself so you know where you're headed, and if you have enough saved and if you can retire, just go to retirementkeyradio.com, click on the Contact Us tab at the top of the page, and we can begin to have these same conversations with you as well.
Thanks for listening to the Retirement Key Podcast with Abe Abich. To learn more about Abish Financial Services, visit retirementkeyradio.com. And join Abe for his radio show, The Retirement Key, Saturdays at 8 a.m. and 2 p.m. and Sundays at 2 p.m. on WMAL.
Investment advisory services offered through Abish Financial Wealth Management, LLC, number 310633, a registered investment advisor firm. Financial professionals are not licensed in all 50 states. To find out if Abraham Abish is licensed in your state, please call 571-577-9968. Abish Financial Services is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Abish Financial Services, Inc., Virginia Insurance License number 127820.